Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started. Good morning. Today is Tuesday, July 20th, 2010. Just quickly wanted to apologize for not having a video last couple of days. I've actually been out of the office traveling a little bit, but I'm back in now, and looking to get back to the market action that you've come to expect. So this morning we're talking about possible Japanese intervention. Now, let's take a quick look here at dollar yen. Oh wow, you can see that just rolled over again. As quick as these things go up, they come back down. I just want to show you on the daily chart here real quick. Dollar versus yen. Yen strengthened to roughly, looks like a 86 and a quarter. All right, that's a 7-month high versus the dollar. And any time that the yen gets this strong, there's always speculation in the market that the Japanese are going to intervene in their currency. They have done it in the past, and the idea is that they want to have a weaker yen so that it encourages their exports, so that'll help them with their economic recovery. However, this may be a time when they may want to proceed with caution. I know that there was some talk about when the Swiss intervened in their currency versus the euro that they actually took some pretty big losses. So right now the market's been pretty hell-bent on yen strength, and we're going to see if that continues. But what we are showing here is, let's take a quick look at the Aussie versus the yen. We're actually seeing Aussie strength today, as well as Kiwi strength versus the yen. And what's happening there is that Chinese stock markets were up overnight, and there was talk that the Chinese are going to loosen their stance on their tightening policy. So they said that they wanted to, sort of tighten the measures and slow down their growth. But now there's some talk that, they may be getting a slowdown from natural business cycles, so that they may take a step back. And basically, as China goes, so is going to go Australia and New Zealand. It's sort of like, the Aussies are known for surfing, so they're sort of riding that Chinese wave. So if China doesn't tighten too much, then they may continue to see strength down under. Now, the RBA just came out with minutes from their board meeting, and they said that they're going to wait for the European stress tests to come out on this Friday and their inflation figures to decide what they're going to do with their rate policy next time around. So if the stress tests come in pretty good or better than we've been hearing from the ECB, and they do show some more inflation in Australia, we could see continued hikes for the Aussie. So just take a quick peek here at Euro USD. Euro's down. You can see it's traded below 130 and is sort of coming down here. Possible double bottom right here at about 1284 for the time being. But overnight we had German PPI figures came in. They came in hotter than expected, but the ECB is going to maintain their asset purchase program as sort of a precautionary measure. So we're going to see lower euro. There's going to be some volatility going into Friday, the bank stress tests. We've been hearing from ECB members that there's nothing to worry about, that these banks are all going to pass with flying colors. And whenever I hear something like that, it always makes me a bit skeptical. So we had seen a bit of a run up with the euro. We're going to have to see how this comes out, but if these banks do pass, then it could be game on again for the euro, as we should be seeing some dollar weakness. But of course, today we're seeing dollar strength. I just want to show you. We'll look at let's just look at pound dollar for the heck of it. Pound's also weak as their austerity measures are starting to come into play, but we've got dollar. Dollar's a little bit stronger, although not versus the Aussie and Kiwi, because we've got stock indices getting clobbered again. Corporate earnings came in, and we're starting to see a trend here of some of these companies are reporting better than expected earnings, but they're all doing this on declining revenues. And the problem with declining revenues is that it shows that companies, while they may be making money, it's always as a result of some sort of cost cutting, and primarily it's just by laying people off. So these businesses aren't really expanding. They're not looking to increase hiring. And that's a negative for the economy overall. So we've got stocks down today, and we've seen a little bit of dollar strength on the back of that. Now we're also going to take a quick look at the Aussie versus the loonie. Okay, the Bank of Canada came out with their interest rate decision this morning, and as expected, they raised 25 basis points to 0.75%. Okay, however, it looks like I didn't get a chance to actually read the policy statement myself, but the market didn't initially react favorably to this, so it looks like they may have put out a little bit of a dovish stance going forward. So as you can see here, right at 9 o'clock when this came out, we saw immediate dollar strength versus that, so they must have been reading into the dovish stance there, or perhaps that number was just baked into the market. So that's kind of what we're seeing. So today's one of these days where we're seeing these currencies sort of trade by region, and we've still got, to show you right here, we've got, continued yen weakness today, although it's coming back down versus dollar. Wow, look at that shooting star candle right up there outside of the Bollinger Band. For my mentor traders, that's a home run trade you should be looking to take. But what we're seeing is that if the Japanese do intervene, then we could see some yen weakness going forward. They've been known to do it in the past. All right, and if China decides that they don't want to slow down as much, or that there's too great of a risk to the global economy, then we could see the Aussie and the Kiwi continue to benefit. So we're sort of seeing that things moving by region today. We've got the European currencies, namely the pound and the euro, down. Okay, we've got the Aussie and the Kiwi higher, and yen's lower. And this is all despite the risk aversion going on in the market today. All right, I think I'm trying to figure out where stocks are right now. They're down. Dow Jones is down some 120 points right now. We've got Goldman Sachs came in. They didn't hit earnings, nor did IBM. If Goldman's not making money and they've got just about every advantage in the world, there could be a problem. Although some are saying that it's due to this settlement that they came out with. So we'll have to see how that happens. But at the end of the day, we're all waiting for Friday's results of Friday's stress tests in the European banks. So that's going to be the big driver this week, and if this should come in and the market's satisfied, then we could see some continued risk taking going forward. Of course, if there's some sort of landmine out there waiting, then we could see markets trade down. And there's going to be a lot of policy decisions that are going to be made based on the results of these stress tests, as the systemic risk from the banking sector may outweigh any individual economic statistics at any country around the world. So that's what we've got for today. I'm keeping the trading short term going into Friday. I'd suggest you do the same. Good trading to all. As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.